The Japanese yen's depreciation against the US dollar may be approaching a floor, according to analysts at Brown Brothers Harriman, BBH. The key driver in this scenario is the risk of official intervention by Tokyo authorities, which is already deterring aggressive selling in the market. This means the yen could stabilize sooner than expected, even as broader economic forces continue to push it lower. The critical level to watch is the USD-JPY exchange rate. If it approaches or breaches the 152 level, that could trigger official action from Japan's Ministry of Finance. This threshold has historically been a signal for yen buying operations, and the market is now pricing in a higher probability of such a response. The mere possibility of intervention is already limiting speculative short positions and creating a more cautious tone among traders. What makes this situation unique is the interplay of policy divergence and market psychology. The Bank of Japan has ended negative interest rates but is still tightening at a slower pace than the Federal Reserve. This divergence continues to weigh on the yen, but BBH argues that the immediate factor right now is not monetary policy, it's the risk of intervention. That risk is real because Japan's foreign reserves remain ample, giving the government the financial firepower to act if needed. The analysts at BBH note that Japan's top currency diplomat has repeatedly. Most people arrive after the move is obvious and the easy upside is gone. We focus on serious crypto education and high-quality signals before the crowd rushes in, so you can understand the setup earlier and move sooner. If you want that edge, visit the link below now. Signaled readiness to act against disorderly moves. These verbal warnings are not just symbolic. In the past, they have been followed by actual market interventions. That history has created a psychological floor for the yen, even if the underlying fundamentals suggest further weakness. Market participants are now pricing in a higher probability of intervention if USD-JPY hits 152. This has created a self-fulfilling dynamic. The expectation of action is already influencing trader behavior. Speculative short positions are being limited, and volatility is being dampened. This suggests that the yen may not fall as far as some models predict. However, uncertainty remains. The effectiveness of any intervention is not guaranteed. If the yen continues to weaken despite official action, it could signal a shift in market sentiment or a miscalculation by Tokyo authorities. Traders will be watching closely for any signs of a breakthrough at the 152 level. The broader context is also important. Japan's gradual policy normalization is a long-term factor that will continue to influence the yen. But in the near term, the immediate concern is whether the yen can hold above 152. If it can't, the risk of a more aggressive intervention rises. If it can, it may signal a more stable period for the yen. What this means for traders is that they need to factor in both the economic fundamentals and the political risk. The yen is not just a function of interest rates anymore. It is also a reflection of official market sentiment and the willingness of Tokyo to act. That makes the yen more unpredictable than it might otherwise be. The next signal to watch is whether USD-JPY approaches or breaches 152. If it does, and if no official action follows, that could signal a shift in Japan's stance. But if intervention does occur, it could reinforce the idea that the yen has found a floor. Either way, the market will be reacting to the next move. The mechanism at play is the psychological and practical impact of potential intervention, even if no actual buying happens. Most people arrive after the move is obvious and the easy upside is gone. We focus on serious crypto education and high-quality signals before the crowd rushes in, so you can understand the setup earlier and move sooner. If you want that edge, visit the link below now. The mere expectation can stabilize the yen. This creates a feedback loop where the market's anticipation of action influences the market itself. The stakes are high because a weak yen can have significant macroeconomic implications for Japan, including inflationary pressures and currency risk for importers. Meanwhile, global investors are closely watching how Tokyo balances its economic goals with the need to maintain orderly markets. The next signal will likely come when USD-JPY reaches or nears 152. At that point, the market will be looking for any indication of official action, whether verbal warnings, yen buying operations, or a shift in policy rhetoric. Until then, the yen's floor remains a topic of intense speculation and cautious positioning.